This is Damon Stevens with Federal Builders. Today is Sunday, November 13th, 2022, and this is stock market prep for this week. Hopefully, everybody had a great weekend, and hopefully, had a great weekend last week as we had the huge bull run here. And as we get into the charts, we'll take a look and see, what do we have planned for this week, possibly with the market. Does the bull run continue, or do we pause maybe for a little bit and consolidate, or are the bears ready to step in? That is the question. So let's take a look at what's going on in the market, see how we close out the weekend and what to prep for this week. Look at the Dow Jones. See, Dow Jones closed on Friday up 0.1%, NASDAQ up 1.88%, S&P 500 up 0.92%. FANG stock continue to be strong. Money, we talked about money flowing out of tech stocks to when the market's going down. It's a leading indicator, and it's been leading us out of this last bear run into this new bull run. And you can see also energy continues to be strong as well. Looking at the overall scanner, you see nothing hit our scanner that was tradable, at least for us. So we continue to monitor that for those opportunities. So let's get at the calendar here, take a look at what's going on. So Monday, there's possible shakeup here, 11 a.m. Eastern time. You have the Fed speaking about the 1-year inflation expectations and 5-year. So could that swing the market? I don't know if it will swing it strong, a strong move, but definitely could rattle the market a little bit, create some volatility, depending on what the Feds say on Monday. So Feds continue to play a game in the market here and shaking this market up. So just be prepared for a move either way as we get into Monday. And then Tuesday, we have producer price index, and you have real household debt. So those numbers probably not as strong as far as an influence as some of the others. Wednesday, we have retail sales, import price index, and also business inventories. And then Thursday, which is typically our biggest day as far as information and news, we have jobless claims and building permits and housing startups, and Fed manufacturing. So we'll see what numbers come out there. Again, Feds are watching this really closely. As long as the market's strong in jobs, the Feds continue to feel like pressure to put on the market here. And then Friday, we have home sales, existing home sales. So just news, lots of news continue to come out here. If you look at the S&P 500, stocks above the 50-day moving averages, typically above 50-day is a bullish sign here. And you can see that we were just on this rocket ride. We had this, peak here at 92% in companies over the 50-day moving average back in August. We had this huge pullback, a little bit of a rally, pull back again, a little bit of a rally, and now we're in this big, huge rally that we're in right now. And you see here, we're close to 81%. Second day there, we're kind of sitting here at this flat on this level, but you see the typical levels, typically are under 80 before we have a pullback. And we're sitting above 80, and here we're at 92, and before we had this huge pullback. So I'm not saying that that's going to happen, but definitely watching this as a sign here that maybe, we're exhausting a little bit up here. And we're also continuing to watch this 2007, 2008 market where we rallied up and then slowly flushed down to new lows in the market. And you see here, not that that's going to happen, but just watching this as well, see this nice climb here and this gradual pullback. Now we're kind of right here under the 20-day moving average. 401 is really where we need to get up and hold above if we want to get out of this bear market and get the bulls running here. And see that back in 2008, the market tried to tag above this 20-day moving average a couple times and failed, and that's where we had this drop here that gradually took us down to new lows. And you see here that the market did, it did hover around this 20-day, broke down below it, just trying to get above it again. So really this 401 area is pretty critical to get above and hold. If you look at inflation rates, we have come down a little bit, but again, 2008, we're at 560 before dropping off, and we're way above that, 770 at this time in the market. So we have a long way to come before the Feds are going to ease up and on their rates. And then we'll see the inflation's in control. So right now, still running higher than we were for several years. Fed fund rate, again, 5.26 was where we were back in 2007, 2008. And we're not quite up there yet. But the Feds have talked about getting over 5%, maybe 5.25 back where we were. back in 2000, 2007, 2008. So we'll see what happens. So definitely monitoring that. Also, record number of shorts continuing to be on the market. So again, the institutions are still looking at the market as far as being bearish and coming down lows. You can look at the S&P, the SPY here, calls and puts. Puts are in red, calls are in green. Here's where you can see even clear down here at 350, almost have 100,000 contracts set to expire if the market doesn't drop down that low. So the market definitely is looking at new lows coming in as we're in this bull market run right now. So just something to be aware of. If you haven't subscribed, also subscribe to FinWealth Live on our YouTube channel. That way we continue to bring this content to you. And hopefully you find this helpful for you as you're prepping your days and looking for opportunities in the market. We got some more charts here. You can see energy pull back up here as we're talking about, we had this little bounce off the 20-day moving average back up to these towards these highs. Talked about, being at 118, 120, maybe 122, which is this upper deviation band. So it looks like, we may have a chance to do that, but, markets overextended as well. You see it consolidating here pretty tightly. So we'll see if we can do it. But it looks like it's trying. Looking at the Netflix here, I think it's above that 200-day moving average you can hold. May continue to have this bull run up here, but otherwise this could become a double top here too as well, or a lower high. So right at the 200-day moving average, so that could be resistance. But Netflix has done really well. You can see this huge run up that it had. So it's really, come in to try to fill these gaps in that it left behind back here in April. Apple, it's putting in higher lows. It's right towards this 200. So, this week is going to be critical because we're right at this 200-day level on several stocks, and that's typically a good breakdown of where stocks can pull back from the market. So we got to get above this 151 area, really hold and get above there to start rallying back up towards the highs for Apple. Amazon, nice little run up here to the 20-day moving average. Again, it's got to get above this 101.50 and hold for a few days to run up towards the 50-day moving average here at 110. Again, everything's critical this week to break above where it's at because it's definitely sitting here at resistance. NVIDIA had this nice run up and then just a huge bounce. So semiconductors really taken off here. So we'll see. It has resistance here at 167. If it doesn't make it through, it might break back down again. Tesla, coming off those lows, it broke above our resistance level here. I really need to get above 200 to start running back up in this channel that was in before, this 200 to 233 level. We'll see if we can do it this week. If not, could consolidate down here between this 200 and 180 level. Microsoft, nice rally up here off that low after making a new low here, running up here back up towards that 200-day resistance. So you can see if it pulled back, back here in September off that 200-day, and back here in October off that 200-day, and we're almost there again. So we'll see if Microsoft can break out, or if it's going to show consistency and pull back down again. Google, running up towards that 100-day moving average. You can see that it pulled back in August, pulled back in September, pulled back in October, and now we're almost there at 98.61. So we'll see, can it break through this time, or is it going to pull back again? So that's what I'm talking about. You got to pay attention to these charts here. So they give you an indication as far as, what the possibilities are and where those possible resistance areas are. You got a 10-year yield. You can see that pulled way down here. It did get support here off the 50-day and bounced on Friday. So if it rounds up back up here, more likely the market's going to start coming down. So just keep that in mind. If it can stay down here low, that's going to help the market, money to move into the market instead of into bonds. Same with the 2-year yield, sitting here right flat here. You can see this little double bottom here, a little bit of bounce. So we're at decision point here. You can see we're above these candles over here, above these candles right here. So this could run up here. If it does, market's probably going to pull back here. Dollar, same with dollar. Came down here, didn't quite tag the 200 yet, but it should find support here. If we do get a bounce on the dollar, again, look for it to affect the market. Also, when the dollar's down, gold is up, and when gold is up, the dollar is down. So look at here, you can see dollar with the dollar down, gold made it over that 200-day moving average. finally up there at that 1763 we talked about. It's been here 2 days. That's a good chance for it to bounce up here, maybe towards 1800. But you can see here, right at that 200-day, and you see that last time we were here, we kind of held for a couple of days and then rejected and fell back. And then again, we were back up here close to it on that 100-day, and then we fell back. And then we didn't quite even make it up to that 100-day, fell back. We're at this 200-day. We really got to hold this to get a run. Dollar's got to continue to be weak. Otherwise, this is just our next bull run. And we're looking for a pullback because you can see, of course, gold, at least at this point, is continuing to be in this declining channel. The VIX down here, under 25, we talked about that being great and bullish. And you see here also we're just breaking under this little this last support area. So if we continue to break down below this level right here, that'll help us to continue to let those the market run in this bull run. If it doesn't, you see here, right here, this may be a little support area where we could get a bounce here if we come down to these levels, which obviously we could hit highs in the market like next couple of days and pull back, and also the VIX would have a chance to pull, drop a little bit, find support down here for a couple of days, and then bounce up. So just kind of keep an eye to see if that happens, or if we just continue to get this bull rally going on for the year end. So here's SPY. You can see here resistance, these resistance areas. This would be the next one. Maybe around this 411, 412 area is a possibility. You can also see these lows down here. So market, continues to be in this channel, which is heading down. We'd have to get a break above our deviation bands and break up this way if we're going to get out of this bear market. Otherwise, we could, come up here, obviously, as we did before, and find resistance up here and pull back again. Couple Q, same thing, downward sloping, trying to break out. It's above this support line here, which is good, but it's got to get above this 200-day moving average at 290 and hold that and rally up here towards 312 and then 333. IWM, kind of, you see here this little flat channel almost edging up, but overall we're downward sloping slightly still. But we can define either a double top here, resistance up here maybe around 190, where this pivot was back here in September, and then pull back here. If we can break through that line, then maybe we can head towards 200. Financials, you see here how this the deviation channel is kind of flattening out here. You see we had this double bottom, nice little rally off that double bottom. We also, we had this midline here we crossed as well. We also crossed, just got above this high line here. So do we get a pullback here, or does financials continue to rally here, which is, trying to pull out of this market here, this bear market, and get a nice bull run till the end of the year. So we'll see if they can do it. Sitting here right at a critical area right here of resistance. So if we pull back down here, we could come down, consolidate down here towards 34.60. If not, and this bull wants to run, maybe we can get up towards 37.50 or 38, 39. Bitcoin, had that nice run up here. We tagged this trend line here off our deviation band, and that's where we had our failure down to this lower deviation band. So you can see deviation and deviation. You see here the pivots. So we found support there, bounced off, and we'll come back down here to retest. If we retest and hold this area, Bitcoin maybe will have a chance to bounce back up, but definitely a lot of negative press out there right now in crypto world. Same with Ethereum. You can see here our deviation still slightly sloping. We did get the rejection off this trend line, and we came up, found support off this pivot, came up, and we're coming back to retest. And so if we retest this and get a bounce, maybe Ethereum has a chance to run here again. So that's our stocks or crypto scene we're looking at this week. Definitely join us and continue to watch our videos. That way they're helping you in the market. If they do, comment below, like it, and provide some comments to us and let us know how we can improve. Anyway, that's our stock or cryptos for the week. Definitely stay up to date with us and stay safe out there trading, and just keep an eye on the direction with this market, because we don't know if we're going to get a bull run at the end of the year, or if we're going to pull back here and continue to ride the channel that we're currently in. And we have a great rest of the weekend and safe night. We'll talk to you tomorrow.